And joining me for a closer look at what's playing out on the market scene at midday is Cremen from Aviceworx. Caroline, thanks so much for your time this afternoon. So really a slow start to the week. Most Asian markets are closed. We also have UK markets closed on account of a public holiday. But ain't no stopping President Donald Trump announcing tariffs on movies that aren't made in the US. Is that fueling the jitters, or are we just seeing a wait-and-see approach?
I don't think it's fueling the jitters. I mean, it's just when you thought tariffs were kind of no longer the boogeyman, it comes up another thing to tariff. I think it's going to be interesting how that gets implemented, because especially with the streaming platforms, their growth is now no longer necessarily in the US. It is around the world. So it might just lead to the fact that US consumers get to see less of what these studios produce, so it might actually backfire. I think really what is affecting the market is there's a bit of uncertainty. You've got the Fed this week, and I think people kind of understand what is going to happen at the Fed meeting. Nobody anticipates any type of rate movement, but what the commentary is going to be interesting, especially the future of potential interest rate decreases, or even possibly an increase if inflation, is still a worry to the Fed. And then, of course, there's going to be the inevitable Trump tweet thereafter.
Yep.
And I think this is what we're all waiting to see, because it's going to be very, very interesting. I think Donald Trump definitely does want to see a rate decrease. It's not coming. That tweet is going to be epic.
So you said we kind of do know what the Fed is going to do come Wednesday. I mean, you look at the jobs data we got last week, Friday, really strong, with the economy adding 177,000 jobs. You look at inflation also easing, cooling slightly in March, I think it was. The GDP figure, though, quite concerning, right?
Yeah, it is concerning. I mean, I don't think it's a huge issue. I think there's a couple of statistical anomalies within there. I think the worries for people are, because literally all of these things are not reflected in the current numbers that we're seeing. The numbers that we're going to see are from May, which we're going to see in June. So if there's going to be any negative impact about all of the issues that have been going on, it's coming in the next 2 months. And I think that people are going to be looking down the line at that. I think there's quite a lot of economists already saying that, the economy is a lot weaker, that the Fed should actually be cutting already. And so it's not only Donald Trump that is saying that. And the Fed might actually very well be on the wrong path here, but we'll only know that in a month or two. And they're not working in an easy environment where you can actually predict these things, because inflation figures, it seems okay. But again, there was inventory stocking ahead of these tariffs. So it's not yet fully gone through, or it's probably not gone through to consumers at all yet. So it's early days. The Fed will probably just wait and see. Whether that's right or wrong, we'll only know in 2 months' time.
It's also interesting to see what the soft data has been look like. I mean, you look at business confidence, you look at, consumer confidence that's really been downbeat over the past few months, right?
Absolutely. And consumer confidence, business confidence, I always say to my clients, is that it is very rare that you see a positive market when business and particularly consumer confidence is low or falling. And definitely those consumer confidence figures out of the US just really look bad. And it's a consumer-led society. So and these are probably the types of things that the Fed will be looking at as well. First of all, you might have inflation and a recession, and I think it's early days. I don't think necessarily those GDP figures were really indicative of a recession yet. But when you actually put that together with your consumer confidence numbers, it does not bode well.
Well, let's move over to some local company news. Astral out with another trading update, and we have clearer sight to those figures. The group expects a profit hit of up to 60%. Of course, we have that cyber attack also fueling those losses. I think the last time I checked, the share price was down over 1%. Is this on the back of, the trading update, or are we seeing it perhaps fall because, markets aren't necessarily upbeat today?
Yeah, I think it's the latter. They did actually come out with a statement a few weeks ago as well. So it wasn't unexpected. I think for me, it's chicken are a very difficult place to invest in. You know, there's always disease, or there's water issues, or there's something, or there's, again, trade issues as well. So to actually throw a cyber attack into the mix as well, I'm on bated breath. I really want to see the results, because I actually want to see how that actually impacted their results, because it's just a curious thing.
Yeah. Moving over to the mining sector, Caroline, things are happening quite fast at Goldfields. Just last week, there were talks that, it's revived its negotiations with Gold Road. And today, we have word that Goldfields sweetened the offer, acquiring the Australian miner for about 44 billion rands. They're offering them that amount. What have you made of that move, Caroline?
I think it's a great move. We've seen a new CEO, his strategy from when he came into Goldfields was to actually just change the mix, to actually get rid of some of the things that are coming to the end of the life of mine, and looking for prospects which had a longer road. So it's a nice acquisition, because, there's quite nice deposits there. They're already in a joint venture in one of their mines. They're familiar with how they operate. So hopefully, that should be a smooth incorporation. And it also gives a better profile to Goldfields, because now we can see the run of that company, that it's looking for longer dated assets. So it's a nice thing to actually have, because it can actually become a steady eddy, if it can actually incorporate those things. And just the gold price where it is at the moment, probably the right time to make that acquisition too.
And that share price up 4% this afternoon. Before we get into stock picks, I can just imagine how important it was for Goldfields CEO Mike Fraser to get that deal over the line, considering what happened with previous CEO Chris Griffith when that Yamana deal fell through, Caroline.
Yeah, but it's also a different environment as well that we're in at the moment. The gold price is rising. You do need economies of scale as well. And I think both miners actually probably see that as well. And like I said, yes, certainly, there were past issues, but also just remember that these two companies do actually have a joint venture, so they're not totally unfamiliar with each other. So I think, yes, fantastic to the CEO, but it was probably an easier deal
to get
do
through.
All in all.
All right, Caroline, let's hit pause on the conversation before we move on to your stock pick. Let's take a moment to touch on some counters that have been attracting interest from your industry peers.
On this note, I'm buying Meta. They reported yesterday. It's still an incredible business. They've got 3.4 billion daily active users. I mean, America is only 360 million people, so they are global, a truly global business. Ad revenue growing, impressions growing, price of ads growing, and they're still growing operating margins as well as they're spending on their capex. It's just an incredibly powerful franchise. There is some regulatory risk about Instagram and WhatsApp maybe being broken up. I think in the US that kind of thing is difficult to predict. So taking that out of it, at 22 times earnings, this quality business, do I want to own it 5-10 years from now? Will I look back and say, I'm glad I owned that? And, I think it's a yes, and I think it's a great business. So yeah, that's my pick, is Meta.
Staying in the tech side of things, but locally, Altron, which is due to report their earnings a little bit later this month. They've already had a trading update and expecting a EPS increase of, I think, about 40%, which is great, except that they've also warned that their second quarter wasn't all that great. So I would tend to wait and see what the price done or what the price is doing around the earnings release. But I think just taking a look forward, sitting on a forward price earnings of probably about 11 or 12 or something like that. And they've got earnings growth of 14-15% going forward, which I think is quite maintainable. So it's exposed to the right kind of sector, because they do provide things like cloud services and helping companies through that. Obviously, Netstar is the other side of the business, which I think, although competitive, should be doing okay. So with that kind of earnings growth rate, the refocus that the company has done over the past number of years, it's a far better run company. I think on that kind of valuation, they're probably too cheap, and they've had a nice pullback, and I can see them quickly or possibly retesting its high of a few months ago, which would give you about a 17-15% appreciation in price plus about a 3% dividend yield again. If you can do 18% in a volatile market such as this for the next year, I don't think you're on a bad wicket.
So Rikus and Grant sticking in the tech sector, Grant going with Meta, whereas Rikus went with, what's this, Altron on the local market. Just your analysis on those counters, Caroline?
Yeah, I do like both of those recommendations. I think Meta is probably one of the safer tech companies from a tariff point of view. They've got a lot to offer on the table, and I think they've definitely been around in the 5 years. And we've had a little bit of a pullback, so possibly a nice time to enter. Altron is an interesting one, very different company to when we had all the shenanigans a few years ago. I think the price is actually looking very, very nice. They've got a nice batch of products there. So if you want to go South African tech, we've got very few tech companies we can look at in South Africa. The drivers are very different here, but I think it's a nicely priced and a very, very nice company, a nice basket of goods, and well run for a change.
All right, so you like those stocks, but they are not your stock pick. Where are you seeing opportunity this afternoon?
Well, I'm going to go topical because we saw over the weekend that Warren Buffett has resigned from Berkshire Hathaway. So my pick is Berkshire Hathaway. I don't think there's going to be a huge change in the way the company is run with Mr. Buffett not there. I'm sure that, at his age, he wasn't doing too much in the office on a daily basis. And I think he's trained a lot of people very, very well. I think, the earnings are down, California fires, were to blame, but I think with the market as it is, with the uncertainty that is there, the trade frictions, this is a steady eddy. It's got a nice basket of underlying holdings. Apple is part of it, their own railways, a whole lot of other different things as well. But I think what really attracts me to this company right now is they've got a $350 billion cash pile. It's this is going to be spent somewhere, and it's not going to be spent on things that are overly expensive. I do trust the team there. So it's almost like a mutual fund, an ETF by default, just done by very, very, very competent people. It's up 20% this year already. And if you had it for 5 years, you would have been up 203%. I really do think this is the type of growth that's going to persist in the years to come.
But yeah, Berkshire Hathaway, one you're picking at 94. It was about time, Caroline. Thanks so much for your time and joining us today. That was Caroline Cremen from Aviceworx.